What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have 5 dividend growth stocks to buy now. These are dividend aristocrats. They're right around the 3% or above yield range. These guys have consistent dividend increases, and they're extremely popular dividend stocks amongst the dividend investing community. Make sure you smash that like button. Let's check these stocks out right now. That first stock is Leggett and Platt with the symbol LEG. It's sitting at 40.72. And right here, it's not doing too hot against the S&P, which makes these guys a very attractive dividend stock. 4.13% dividend yield, a PE ratio of 13.90, volume of 2.60 million US dollars. Market cap 5.43 billion US dollars. Its year range was 37.05 to 59.16. Day range was 40.44 to 41.27. Its previous close was 41.48. So what are these guys about? What makes them a dividend aristocrat? Their overall mission is a commitment to enhance lives by delivering quality products, offering and empowering, rewarding careers, and doing our part in bringing a better future. So if you look at their business, they have bedding products, specialized products, furniture, flooring, and textile products. And guess what? Everybody wants to buy a house right now. So that's one thing that makes these guys in demand and a popular dividend aristocrat. And I'll even go over their revenue real quick. So right here, this is in millions of US dollars. 3,782, 3,917, 3,749, 3,943, 4,269, 4,752, and then 4,280. You can blame the pandemic right here in 2020. So these are trends right here. 2016 to 2019, they were going up. So that makes these guys very popular. And I'm going to show you their dividend history. So check this out. This is 2013, 30 cents, 2014, 31 cents, then 32, 2015, 2016, then 34, then 36, then 38, then 40, then 42 cents at 2021. So it's sitting at 40.72 as a PE ratio of 13.9, a dividend yield of 4.05%, annual dividend of 168. This is a very popular dividend stock. This is what I like about these guys, and these guys are definitely on my radar. I like that 4.05% dividend yield, and these guys are not doing too hot against the S&P, which makes them a very popular dividend aristocrat right now. Let's jump to the next dividend stock. And Cardinal Health's another one. CAH is a symbol. It's sitting at 52.59. Dividend yield of 3.73%, a PE ratio of 13.59. Its volume is 3.18 million. Its market cap is 14.82 billion US dollars. Year range was 45.85 to 62.96. Day range was 52.33 to 53.31. I'm going to tell you, as a nurse, I cannot tell you how many products Cardinal Health has in the hospital. Gloves, utensils, stuff for like surgery and stuff, wound care. Their logo is everywhere on a lot of products in the hospital that I'm at in Northeast Ohio. They are in demand. I'm going to go over their revenue real quick. And they're not doing too hot against the S&P because they're not jumping up too fast. And that's beautiful because guess what? They're cheap. They're sitting at like 50s all these years, 52, 53, 54, and it's increasing its dividend. That's what makes these guys beautifully attractive. I'll go over their revenue real quick. And this is in millions US dollars. 102, 121, 129, 136, 149, 145, 152, 162. So its revenue is increasing. We'll go figure. People are getting sicker. The hospitals are overwhelmed. People are just flowing in the hospitals and stuff. They're sick. The bugs out there. People are getting sicker. There's a need for wound vacs. You're diabetic. You have an infected foot. There's a lot of reasons why, these guys are in demand and their revenue is going up. They're a fantastic company. They're in demand. They have products that people need for healthcare demands. And remember, the sedentary lifestyle is on the rise. The obesity rate's on the rise. Diabetes is on the rise. Hypertension's on the rise. And if you have diabetes and all these situations and you're smoking, you're going to probably get an amputation over time if you're not taking care of your hemoglobin A1C levels, which is basically a test where they test your blood sugar every 90 days. And that's the truth serum. You can't fast. You can't cheat doing it. People are getting amputated because they're sick. And Cardinal Health has a lot of products to help people that are sick and getting amputations. And I'll show you their dividend history. Man, you ain't kidding. This is like a prime rib that's roasting all day. It's just getting better over time. The juices are coming in. Look at this. 30 cents, 34 cents, 38, 44, 46, 47, 48 cents, 49 cents. Look at this growth. Dividend yield of 3.7%, a PE ratio of 13.59, annual dividend of almost $2, and it's sitting at $52.59. This one's definitely on my radar. Once I make some advancements and touches to my M1 Finance dividend portfolio, I do need to have a little healthcare thing, like with Cardinal Health, maybe Walgreens, AbbVie for sure, Johnson & Johnson potentially, or I may just buy individual stocks of Johnson & Johnson. I'm not sure what I'm going to do with some of those, but this one, I mean, the dividends are just hiking. I mean, look at this. 30 cents in 2013, 49 cents in 2021. You're seeing hikes, and that's what makes these guys very attractive. Let's jump to the next dividend stock. Here's another attractive dividend stock, Consolidated Edison. ED is a symbol. Dividend yield of 3.78%. This is one of the biggest energy companies in the United States. PE ratio of 24.47, a volume of 2.42 million, market cap 29.55 billion US dollars. Tier range was 65.56 to 86.25. Stay range was 81.35 to 82.94. So I'll just show you their territory too. So right here, the Con Edison gas system has nearly 72,000 miles of pipes of laid and end and long enough to reach Paris and back to New York City, and serves Westchester County, the Bronx, Manhattan, and pairs of Queens. So that's one thing that's very interesting with these guys. 1.1 million customers in Manhattan, the Bronx, Queens. So that is huge. So as an energy company, okay, that is huge. And their revenue's pretty good too, which I'll show you. This is in millions of US dollars. This is consistency. 12,919, 12,554, 12,075, 12,033, 12,337, 12,574, 12,246. So it's a little bit of consistency. And here it's not inconsistent, it's consistent. And their dividend hikes are very attractive. Oh, you ain't kidding. Look at this. 2013, 61 cents, 63, 65, 67, 69, 71. 74, 76, 77 cents. It's sitting at 81.99, a dividend yield of 3.71%, a PE ratio of 24.47, annual dividend of $3.10. So that's pretty attractive as a dividend stock, especially as an energy stock. Consistent dividend increases, dividend hikes. That's what makes these guys very attractive as a dividend stock and very popular amongst the dividend investing community. Let's jump to the next dividend stock. That next stop is Aflac. AFL is a symbol. Dividend yield of 2.51%, a PE ratio of 10.32. The volume is 3.12 million US dollars. Market cap is 42.38 billion US dollars. Its year range was 44.76 to 64.22. Its day range was 63.17 to 64.14. So you're seeing something that was beating the S&P, and then it's trying to catch up to the S&P. It makes these guys an attractive stock, a dividend stock, and also a traditional or Roth IRA stock because it is increasing in its value and price per share over time. So that is traditional and Roth IRA material. And again, this is not financial advice for entertainment purposes only. Disclaimer in the description. These guys are catching up to the S&P. They're seeing dividend increases, and these guys potentially, don't quote me on this, but your net asset value, this is what makes them a really good traditional Roth IRA stock. The net asset value increases. And again, you want your net worth or net asset value to increase when you have a traditional or Roth IRA. You want to grow. Okay. And let me show you their dividend history. Their revenue has been fantastic. I really don't want to go into that. Their revenue is doing very well. So I'll go over their dividend history. 2013, 35 cents, then 37, then 39, then 41, then 43, then 45. What is this? Something looks very special. We'll go over that in a little bit. 26 cents, 27 cents, 28 cents, 33 cents, then 40 cents. So making a comeback, 35, all of a sudden it hit 40 cents, sitting at 63 with a dividend yield of 2.06% with a PE ratio of 10.33%, annual dividend of 160. So what is going on here? I wonder what makes them a very attractive dividend stock, traditional and IRA stock as well. They have an extensive stock split history, and this is on their website. Just an example of what they do. So this is a 2-for-1. This is just the action 2-for-1. So this is very attractive right here. 2-for-1, 2-for-1, 3-for-2. So they have an extensive dividend stock split history. Looking at the trends, they can do that again. Again, don't quote me on that, but they can do that again. So, I'm not giving financial advice for entertainment purposes only. Disclaimer in the description. I'll repeat myself 1,000 times with that. But I like the trends, and there could be an anticipation that they're going to split their stock again in the future if you keep on reinvesting and leaving it alone. The trends are there. Let's jump to the final dividend stock. And that final dividend stock is FRT, Federal Realty Investment Trust. It's sitting at 130.02. Previous close is 132.85. Day range is 129.07 to 132.27. Year range is 84.38 to 140.51. Market cap 10.11 billion US dollars. Its volume is 437.17K. PE ratio 42.99 and dividend yield 3.29%. So what are these guys about real quick? We're an S&P real estate company founded in 1962. Our mission is to deliver long-term sustainable growth through investing in communities where retail and demand exceeds supply. So they're fully integrated, stability, execution, and growth. Obviously, they're doing pretty well because you know why? Their revenue is doing pretty well, which I'll reveal to you. Again, this is in millions US dollars: 686, 744, 801, 857, 915. 935, so 686 in 2014 to 2019, 935.788. A little bit of a dip because of the pandemic. You can play the pandemic card in 2020, where it's 835.494. But their dividend history and their trends, looking at the trends of their revenue, they'll probably rebound eventually. And I'm going to jump to their dividend history. Look at this: 78 cents, 87 cents, 94 cents, 98, $1, 102, 105, hit 107. So look at this. 2013, it was 78 cents. 2021, it's 107. So it has a PE ratio of 42.91. Remember, FFO is the most important. Hasn't done well against the S&P, and it has a 3.22% dividend yield and a $4.28 annual dividend. Well, let me know what you think of this video. What is your favorite dividend aristocrat stock? Do you own any of these 5? Are you considering any of these 5? Are these buy and hold stocks, forever stocks? You tell me what you think. I'm going to post a video Thursday. I have to do some lectures Wednesday night. But, you guys have been fantastic on this channel. I'm going to continue to post videos for you guys. And you guys take care and have a good one.